Hey guys, so per usual, everything on this channel is educational information and not trading advice. So I put together a safe EMA entry checklist, sort of a high probability EMA entry, especially during times of uncertainty or volatility, something we're headed towards with the Bitfinex reopening here. Now, traditionally, a lot of people think EMA crosses are the entry signal. Here I'm using the 50 and the 200. You can use whatever two EMAs you want to use. You can use MAs or TEMAs or whatever moving average variant you want to use. But the EMA cross, I'm arguing here, is generally not the greatest entry point. If we look at this cross, you can see it's the local top. If you look at this cross, you can see it actually worked out. We kept going further. So sometimes they work out, sometimes they don't. So what I did is put together this 3-check ready, set, go system to help myself included, figure out when's the best time for an entry based on these EMAs on the hourly time frame. Now you can use any time frame you want. I just like the hourly a lot when I'm deciding on certain entries. And I know this chart is a little busy, so let's unpack it, like the left side first and then the right side. Now, none of this is exact. It's not as perfect as I'd like it to be. Obviously, it's going to be different every time. It's going to look different every time. But let's go through the 3 steps of the entry signals. So first thing you want, if you're looking for a long, is an example of a resistance failure, which would be this is what I'm highlighting here, a break of the 200. Now you can see it doesn't technically break, doesn't close above cleanly until maybe the 5th candle. So that's not your entry, that's just your get ready signal. That's the sign that times are changing. We're going long versus short here instead of short versus long. So you can see we miss all of this because we're not in a trade yet. Okay, we missed this local top. We also miss this being stopped out. Anytime we breach below the resistance turns support, I would consider that being stopped out or closing the trade, should you be in the trade still. So here I'm saying we don't have a convincing support test. So what we do have is another example of a resistance failure. So a lot of people may have, traditionally they'd go long here on this cross, they would have bought the top, and then they would have been down pretty heavily on this. A lot of people likely would have sold. There's a bear pattern here, the bear flag. But I'm saying you shouldn't even be in a long yet, because using the get ready, get set, go 3-check system, support was never confirmed. We did have one long wick touch of the 200. So whether or not you take that as a support confirmation or not, it's up to you, obviously. So that's highly variable. But so we have the 2 resistance failures here and here. So we're still not convinced that things are supporting yet. And then we get examples of support tests holding the support, holding the 200 EMA, okay? This is all about patience. The reason you're so patient with this is because it's either super sideways or super volatile. This was during the super sideways action when it could have gone either way. So that's one of the reasons why you're even more patient than you would otherwise be. You don't want to just be making entries in sideways action based on nothingness, So here I'm highlighting these are examples of a support test. Once support confirms, such as here and here, your re-entry would be another confirmed support test, or you could read this as a confirmed support test. That would be your go signal, because you already had your get set. Okay, so you had to get ready, get set, get ready, go. You had your support confirmation. You may have read this as a support confirmation. Again, I don't know. This obviously isn't 100% slam dunk, but it is what it is. So we have the EMA cross, confirms the reversal. Entry would be support test, holding or confirming. This is also a tweezer bottom, which is a candle pattern on support, which is extremely great entry signal for a long. You can see you don't really get much out of this. Again, this is during the sideways period. So if you were long here, you didn't close yet, you held through this, you'd obviously be rewarded up here. I'm not going to talk about targets in this video, but basically your targets would be some sort of horizontal support or resistance. You can see that this is generally the horizontal support resistance line. So once that's broken, stuff kind of goes nuts on this hourly chart. So maybe you didn't close on this candle or this candle, but you closed here. There was likely a div of some kind going on here, where you get a higher high and a lower low, or a lower high on the oscillator. Let's say you didn't even close there. Another example of a target close would be a breach of this 50. A breach of this 50 convincingly, maybe here on this candle, you'd close here. So let's say you were long here, you'd close here. Maybe you'd get 80% of an otherwise sideways, seemingly trendless market at the time, okay? And that depends if you're awake, if you see this, etc., etc. But that's one example of how you can actually trade seemingly untradeable nothingness. So let's say you're not out at the 50, your hard stop would be a breach of the 200 again, because the 200 is your confirmed support, remember. So if the confirmed support breaks, that says close your long, it's time to rethink where this is headed. So now we're looking at the right side of that chart, and again the checklist is resistance failure or support failure, a cross of your EMAs, and then your bids or asks on the support or resistance test of the 200 or whatever your bigger EMA is, okay? Your stops would always be a candle close above or below the 200, and your close or your targets would be based on each trade, candle patterns, chart patterns, horizontal support resistance, fibs, pivots, things like that. So it's hard to pinpoint targets the way I'm laying this out currently. So on the left side we had the long, now we have the short. We can see we have an example of support failure. That's your get ready signal. Here's your cross, that's your get set signal. Once you get the get set signal, place your asks on the 200, or your bids if it was the long in that case. And you can see, I'll show you the rest of this, but this held pretty nicely until the drop. So like I said, again, the EMA confirms the reversal. Entry would be resistance test, holding, confirming, and again you get a pseudo tweezer top here. You don't necessarily get a strong breach of the 200. So your entry on the short is here, and again you get the drop. Your close can be based on any number of things. You can see that there's some sort of inverted head and shoulders action going on with these three wicks here. You could see that there's a falling wedge-ish sort of thing here. I'm sure there's some sort of horizontal support or pivot or something here as well. Let's say you weren't closed on any of that. You could put your limit stop or your hard stop on the breach of the 50. And then again, if you weren't actually closed there, you would definitely close it on the breach of the 200. So whether you consider this being stopped out or not is really up to you. This looks like a convincing break of the 200 to me, so it would be an example of a short stop if your trade wasn't already closed. But again, you get this re-entry on this shooting star type candle. And let's say you weren't even, you weren't convinced, that's fine. I said it confirms, but let's say, you just got stopped out, you don't want to re-short, you're not convinced. Well, you get rewarded because you get 4 more resistance tests. Okay. And these are wicks. These are no doubters that this is definitely resistance on the 200. So before this concluded, what I was looking for the long would be a resistance failure support test above 200, which never happened. And I said a support test would probably consist of at least 3 wicks or 1 long wick. You can see we get the 3 here, we get 4. So this is a pretty convincing example of your short is good. These are your short entries. Let's say you weren't 100% account long short here, you could just keep placing asks lower and lower and lower. Obviously, it gets a little more dangerous when the EMAs are close and things could go either way. So again, that's up to your risk profile and how you want to trade, how you're willing to trade, what your trading sessions are like, that sort of thing. So if we look at the conclusion of this, we can see that here were the 3 wick touches in the final 4th one. Obviously, you got this giant short opportunity. Now, I don't know if I wasn't around. I was in jury duty, and that was a whole other story. But no, it looked like it was going to reverse on this. There was definitely divs all over this. There was some sort of falling wedge-ish action. I'm pretty sure this was the announcement of when Finex said that they've been hacked. Anytime that happens, you're going to see large emotional candles like this. So if you had been short based on the 200 several days ago, and you were still short, and you weren't getting pummeled with fees or anything, this is a great example of, just hold it. Obviously, when we get this bounce, that tells you that that's a hard rejection of that level. Your targets could have been closing partially on the S1, S2, and S3. Closing most of it here, half of what's remaining, and then the final whatever. This is completely arbitrary and up to you as far as the targets are concerned, but that's an example of how to hold on to a trade when you're doing really well. A lot of people tend to freak out and think like, oh my god, I gotta close this, when in reality you want to hold your winners, right? And psychologically a lot of people just can't do that. So let's say you're flat right now like me, and you see this stuff happening. So let's dive into that a little bit. So again, I'm flat. I have a long bias. I don't think we'll continue to see downward momentum. I think this was a one-of. This isn't a problem with the protocol, it's a problem with one exchange. On top of that, I think the Bitfinex reopening will be bullish. I think people will try to get their fiat into Bitcoin, causing a premium on Bitfinex. That premium will likely be felt globally across all the exchanges. It definitely won't be, as high as the premium on Bitfinex, but I think it will bring up the other exchanges. The other option is people try to get their money out via other pairs like Ethereum Classic or LTC. The problem with that hypothesis is that there needs to be a book for those things. As far as I know at the moment, everyone just has fiat. So their options are a wire transfer or buying a cryptocurrency and getting it off that way. In order to buy the cryptocurrency, there needs to be an order book. In order for there to be an order book, there needs to be bids and asks on that order book. I don't know how the ask side is going to work. I don't know how any of this is going to work, but maybe I'm misinterpreting what's going on here. But most likely what's going to happen is the Bitcoin order book will be filled first. There may be high and low bids on other pairs with a gigantic spread. Some people might be okay with that in order to just get their crap off the exchange. So this event, I think overall will be bullish. at least even if it's manufactured and not organic, quote unquote, initially I think we're going to see a pop. So that's why I'm currently biased for a long. So based on that and using this EMA checklist, let's go through this real quick. So you haven't seen a resistance failure yet. You saw this great, again, resistance test which held. Okay, so this could have been another short. So based on EMAs alone, right now you should be short-ish. We did breach the 50. Anytime you're between EMAs like this, it's kind of like sideways neutral, just because it could break either direction quickly. So get ready would be, like I said, resistance failure. Get set would be the cross, and the go would be a support test on the 200. Now we may not see the support test. We may not see the cross quick enough, just depending on, this is a market event. It's kind of like NFP or settlement or stuff like that. Whether or not you'll get 6 hourly candles just chilling, I doubt it. It'll probably be rather quick, and it'll go for a little while, and then it'll be a violent drop again, just because either Bitfinex will reclose due to financial reasons or legal reasons, or it'll be impounded somehow, offshore. I don't know. Who knows? But I think in the interim, there will be a premium. Expect craziness. Expect possible touches of all-time highs on Bitfinex as far as their order book's concerned, because once people get stuff off of there, I think the smart ones will stay off, and you'll be left with crazy spreads on all the pairs. So if you guys have any questions for me, let me know in the comments. Like, dislike, share. Let me know if you learned anything. Question of the day is what EMAs or type of EMA variant do you use, and which two or more 50-200, for example, which EMAs do you use? Should you not use the 50-200? Do you use more than two? Let me know. Post a chart in the comments. Thanks.